Good morning, good evening, good whatever time it is you're watching this. I'm Dave with Cups and Handles, and in this quick market recap, we're going to break down today's SPY price action, identify the key technical levels that matter, and discuss what I'm anticipating for the next trading session. We only have a few minutes, so let's jump right into the charts. Hey everybody, welcome to today's recap, and let's go ahead and just get right into it. So we had our daily moving averages that we did test today. We did test the 5-day, the 20-day, and the 50-day. We were getting very close to testing the 10-day, but that's not really necessary at this point. I'm going to zoom in pretty close here. As you can see, the 5-day moving average is pulling underneath the 10-day. So that is the first really bearish indicator that we are looking for if we're expecting the SPY to drop downward. Now, with that said, our 5-day moving average was at the 748.55. The high of today was at the 748.73. So basically hitting right below or right above that level just a little bit and rejecting. The 20 MA was at the 744.79 and the 50 MA was at the 743.44. So we did reject both of those ranges as well. Now the lower bounds of the 20 MA was at the 742.79. So as you can see, we closed very close to that range. And the lower bounds of the 50-day moving average, the 50 MA, was at the 741.44. Now, we did hit a low today of the 741.51, so we essentially tested all the way from the 5 MA down to the lower bounds of the 50 MA, okay, and closed slightly below the lower bounds of the 20 MA. So that's very important. And what that means is that over the next two sessions, assuming we continue pulling downward, we're going to see the 5-day moving average continuing to pull under the 10 MA and start getting close to this 20 MA. In fact, it'll probably be tomorrow or even Wednesday that we see this level challenged by the 50 or by the 5 MA. And that's going to be the second major bearish indicator. Okay. The third bearish indicator would be the 5 MA crossing under the 50 MA. We're not quite there yet, but a couple days pushing downward, we absolutely can secure that level. Now, I talked about yesterday's video where if we see the 743 broken, that's going to be very, very bearish. Now, we did see that broken, but we need to continue to see that broken throughout the rest of the week. Because that's basically where that 50-day moving average is sitting. And as long as we continue pushing under that and closing under that, that's going to work on pulling the 5-day, the 10-day, and the 20-day moving averages under that level. So that's very, very crucial to pay attention to as we move forward. Trading is a skill that can last for a lifetime. Join my Patreon for live classes, my personal market analysis, premium Discord access, and direct communication with me. Invest in yourself, become a more consistent trader, and build a better future for yourself and your family. Visit patreon.com/wooksy to join today. Thank you so much, and let's return back to the video. One thing I also wanted to make a highlight of is that the ADL on the daily time frame today pulled down very, very massively. Even compared to the last major sells, this is starting to get us down pretty low. We're not at the point of when we hit that 716. I don't know why it always says 716 on the daily time frame. It's actually 726 or 724, somewhere in there. But the ADL is starting to pull down, and that's very important to keep in mind. Now, the next thing that I want to get into is the hourly time frame, and I want to go over some structure here. Is that we talked about how there was the potential of this cup forming and starting to pull back upward if we were going to see some of that upward momentum. We're not seeing that at all currently. And with that, that starts to create some major bearish structure. As you can see here, we have this very large inverse cup starting to get ready to close. And we are getting very close to a major support, that major support level being at that 739.38. So I do expect that over the next few sessions to be challenged if we're not going to see some positive momentum at this point, and very likely form this inverse cup, start taking us down to that support range, and from that support range we can start to build some bullish structure, as we can potentially create a handle before pushing down further. But we do have some other very, very important supports underneath us. Okay, I did not mark this one at the 732. Let me get the exact level. It's at this 732.11. That would be the next level to start watching for. But the one that I'm really looking at is this 726.65. And I want to correlate this on the daily time frame here for a moment. But again, that 726 aligns very, very well with what we're seeing with the lower Bollinger here. The daily lower Bollinger is currently at that 729.89, and pulling into that 726 would pull us below the lower Bollinger, which is what we do expect if we're going to get that lower Bollinger move towards the downside. Okay, so that's aligning very well. These 1 hour structures and supports are showing us that extremely likely we're going to start pushing towards those levels unless we get, some very, very good news and start completely retaking some of these resistance ranges at the upper end. So we would have to pull to that 748.52. From that 748.52, we would have to see that 751.30, the 754.79. Those aren't exact levels to the penny, but very close to those ranges. So at this point, we have a lot more work to do on the upside than we do on the downside, which is not exactly an ideal position to be in if we're expecting any bullishness here. From this very large inverse cup and also this double top, this can pull us into a much larger head and shoulders. Okay, so if we do start building the liquidity for our right shoulder, which we're somewhat starting to do at this point, this would coincide with creating an inverse cup handle, or creating a handle for that larger inverse cup. And overall, what that would do is create this very, very large inverse cup to that 726. So that's kind of what I'm expecting out of the week. Is I'm expecting some additional bearish structure to start occurring. Now today, again with those moving average tests, you can see on the hourly time frame, and I actually want to move this to the 30-minute time frame and turn off the Bollingers here. But you can see almost right in here, if I can get the trend line going, is that right in there, there was that 20 mod test. Okay, and we know that was a 20 mod test because the bottom of that range was at the 743, basically 82, give or take, and then the upper range was at that 747. Well, where was the upper bounds of the daily 20 mod? It was at the 746.79, so that's right above that range. And where was the lower bounds of the 20 mod on the daily time frame? It was right at that 742.79. So just $1 off the lower bounds there, which we ended up taking in that range right there before completely rejecting to the downside. So we are starting to see our daily levels being pulled through. That's usually a very bearish move. When we do expect bullishness, and I do want to show this here, is that generally when we're expecting bullishness, we see a bounce off of that 20-day moving average. I do have some previous examples here, if I can find them. But you can see kind of throughout the year, going back all the way to 2025, how we pulled on that 20 MA, have a bounce upward, pull down the 20 MA, have a bounce upward, pull down a little bit below that 20 MA, but bounce upward, 20 MA, bounce upward, rinse, repeat, rinse, repeat. When things start getting really bearish, and I do want to turn off the Bollingers here for a moment, we start to see them not bouncing off that 20 MA anymore. Now that 20 MA, instead of becoming a resistance to or a support to bounce off of, it becomes a resistance to push us downward. Okay, and potentially we're going to start seeing that here. It's a little too soon to see, or a little too soon to say whether that's the case here or not, but it is starting to look that way. We're getting dangerously close to having the market conditions enter, that bearish stance. Now, what I'm expecting out of the day tomorrow, again, looking over our structure, I am expecting that 739.38 to be hit. Now, potentially we could push underneath that range because generally that's what happens with inverse cups. Usually push down, form that handle like I talked about. So pulling underneath that range would make a lot of sense at this point. Okay, that's kind of the overall expectation tomorrow. We don't have any news that's going to rally the market. We don't have any major earnings tomorrow that's going to rally the market. So there's really nothing to kind of save the market at this point unless we get a tweet from, you know, our president or some other positive news that's outside of the scope of what we expect right now. So that's the daily recap. That's the analysis, what I have for tomorrow. And I did not get to stream today. I was feeling very, very bad tonight. Or today, I did not get to sleep very much last night at all. My daughter was up most of the night, and it just made it so today was not going to work out. With that said, I will be streaming on Wednesday morning to make up for the lack of the stream today. So I look forward to seeing everybody tomorrow, and I look forward to seeing you all on Wednesday as well. So with that said, I hope you all have a great evening, good morning, whenever you listen to this, and I will talk to you in the next one. Take care, everybody. That wraps up this market recap. If you found the analysis helpful, please take a moment to like the video, leave a comment, subscribe to the channel, and share it with someone who would benefit from these daily market breakdowns. It really does help support the channel and allows me to continue creating free educational content for everybody. As always, have a trading plan before you enter a position, manage your risk, and remember, we're not trying to predict the market, we're trying to prepare for it. Thank you all for watching, and I'll see you in the next one.